Welcome to Bankless, where today we are talking about centralized exchange token listing fees. There has been some drama on the crypto Twitter timeline as it relates to probably one of the more important subjects when it comes to the release and liquidity of founder-owned tokens, newly launched tokens. This drama got started when the founder of a prediction market project on Base released the details of an offering that he claimed he got from Binance about the token listing fees for what it would be required for to launch his token on Binance. This token doesn't exist yet, but is in the project of a TGE. And apparently, the token listing team at Binance sent this individual, this founder, CJ, who you're going to hear from on the podcast today, they sent him their offer of this is what it takes to get listed on Binance. And they did that before they sent him an NDA. And so he just released the offer on Twitter. Now, everyone knows that there are centralized exchange listing fees, and everyone has murmured about the gargantuan take rate that Binance charges startups about their tokens. If you want to get listed on Binance, this is what you have to pay. I don't think these deals are cookie cutter. I think every deal is kind of made based on the facts and circumstances of the project, but broadly, people understand these things to be very, very large. We've never really gotten confirmation or details or like explicit truth about what a deal like this looks like because no one has released this information. But it seems like because of a slip up on the Binance side, the NDA was not sent, and therefore this individual was free to disclose on Twitter in public what exactly that deal was. And the deal was egregious. This particular startup for Limitless, CJ, was charged 8% of the total token supply and $250,000. That was the offer. CJ sounds like he's not taking it. And instead, he just took that offer to Twitter and be like, look, Twitter, look what they are asking for, which is kind of egregious. Now, plenty of founders have taken this bet. And I asked CJ why he thinks that is. Why give 8% of your total token supply up to Binance? And the calculus behind that. And the conversation is pretty important. CJ seems like he's a pretty big on-chain maxi. And thinks that does Binance really need to be charging these things? And this is even good for founders at all. And if you are a founder that believes in your project, why would you give up 8%? And he does illuminate that the calculus does shift if you're a founder who doesn't believe in your project and you are trying to join Binance and kind of just getting cashed out. Overall, that's kind of the theme of the drama on crypto Twitter over the last 48 hours. If you go on to crypto Twitter, CZ and Binance are explicitly naming this startup founder, kind of a big PR mistake from Binance. And it's like the 800-pound gorilla in the room who owns all the liquidity kind of going after the startup founder on Base. And so it's entertaining at the very least. And I think this is also a very important discussion for liquidity and fees when it comes to startup founders trying to find liquidity for their new token to attract investment. It's a pretty important conversation. I think CJ does a great job giving his perspective as a founder and just giving his advice to other founders in the space who are also going through some of these conversations. So before we get into the conversation with CJ, and in addition to everything I just said, we're also going to talk about Limitless, his prediction market startup on Base. We're going to talk to some of our friends and sponsors over at IMMUNEFI, one of the most trusted brands in Web3 security. They're a security company that helps secure over $180 billion in value from different apps that they secure. They've averted over $25 billion in hack damage across 650 leading Web3 protocols. And they are delivering the first security operating system for the on-chain economy. It's designed to deliver complete on-chain security in just a single command center. So IMMUNEFI's edge comes from advantages that no one else can replicate: distribution, data, and trust. IMMUNEFI already protects the core infrastructure of crypto, Ethereum, Optimism, Chainlink, Aerodrome, Bitcoin, and 100 other protocols. And IMMUNEFI AI is powered by the largest data set of real-world exploits, bug reports, and mitigations in crypto. Every new security event improves IMMUNEFI's intelligence, creating compounding advantages that drives sharper detection, faster response, and proactive defense. There is a link in the show notes for you to get your app protected. If you have an app that has customer deposits, you need protection. Don't go without protection. And so there's a link in the show notes for you to learn more about IMMUNEFI. With that, let's go ahead and get right into the conversation with CJ. I'm here with CJ from the Limitless prediction market. CJ, how you doing, man?
Hey, David, how are you? Thanks a lot for having me on the show.
You are the main character today, at least over the last 48 hours on crypto Twitter. How you feeling?
I definitely don't want to be the main character, so that's not necessarily a bullish signal. Maybe that means I should tone it down a little bit.
Okay, so for listeners who aren't on crypto Twitter, there's been an ongoing conversation about the role that centralized exchanges have in providing liquidity to tokens, especially when it comes to listing fees. And this concept of centralized exchange listing fees has kind of been this like nebulous topic that no one has ever been really able to define because no one knows what the true listing fees are. And, Jesse from Base will go on Twitter and say, Coinbase has no listing fees. And then representatives from Binance will be like, Binance has no listing fees. But then in the background, anyone who's ever talked to a founder is like, oh yeah, centralized exchanges totally have listing fees. When Jesse from Base says that, I kind of believe him. I don't really have that same sort of relationship with Binance, or I don't really know anyone in the Binance world, but like everyone talks about the magnitude of Binance's listing fees, but no one has ever been able to put numbers behind them. Like, what are these things? What are the actual fees? Now, the story, as I understand it, CJ, is that you have a startup. It's Limitless. We're going to talk about Limitless, a prediction market on Base. And you are exploring your TGE, future incoming token. A sale round was going around on Kaido. And so I would imagine you talked to Binance about like, hey, what about getting my future incoming token listed on Binance? And it sounds like, as I understand it, they sent you the listing fee information, but they forgot to send you the NDA that would legally bind you to not disclose the listing fee information. And so then you just put it out onto a tweet, and everyone on crypto Twitter is like, we finally have the numbers. And the numbers were like egregious. It was like 8% of the total supply of the tokens plus like $250,000 fee on top of that. And so finally, for the first time, we were able to like look at these numbers and be like, 8% of a total supply of a project. Holy hell, that is a lot. I'll pause there and give you the microphone in case I got anything wrong or in case you want to add any color to that. But I think on behalf of the crypto industry, I think everyone's kind of like, hey, thanks for posting that information. Would you have any color you want to add to that?
Yeah, so I mean, the first thing I would love to say is I really respect CZ and I really respect Binance. I really hope that this is a window for not only Binance, but for centralized exchanges in general to be open to constructive feedback from the community. Yes, I'm a builder, but before I was a builder, I was a community member. And I think it's very important that this feedback is heard by centralized exchanges. And I think it's very important that if centralized exchanges want to exist 5 years from now, that they really take heed and start to adopt more sustainable and fair and equitable models. In terms of the situation, like what happened, I mean, in terms of the NDA and all of that, well, FOMO is, you probably understand a lot about this in your capacity as a venture investor. FOMO is a very interesting emotion that drives us to do very wild and unprecedented things. And I mean, during the token 2049, was very wild time for Limitless. I mean, coming from like 6 months ago where almost nobody wanted to fund us, and I was having a very hard time trying to secure funding for the future of the company, to like right now, we had our Kaito sale, which was like 200x oversubscribed, like 200 million in community pledges, and then also a venture funding round that was like 2.5x oversubscribed as well. And so I think that, I didn't apply for any Binance listing. I didn't submit any due diligence forms. I think usually what happens is projects engage Binance through their listing application or through their due diligence form channels. And if I'm not mistaken, as part of the due diligence forms, there are some kind of like confidentiality clauses or something like that. But the situation between Binance and Limitless unfolded a little bit differently, and I would say was probably driven by FOMO in that, exchanges are, looking to list tokens that generate, demand and trading fees for them naturally, right? And so I think they were potentially like just excited and open to work with Limitless, and that's why, we kind of had the situation where the proposal was shared without, any confidentiality agreement in place. Now, I don't actually begrudge, Binance for doing that. In a way, I actually respect their hustle. Like, we're a startup, right? We appreciate like moving fast, and not getting tied up in like red tape and like corporate processes. So I appreciate actually that they did that. And I think the reason it's not right to say that this information has never been made public before just because of confidentiality agreements. I also would say that and this is something that we maybe don't want to admit necessarily, but it's not only centralized exchanges that are at fault here, right? I mean, there are also a lot of founders and market makers who have kind of been part of this process and part of this like manipulation and extraction games. And I think like this is kind of a well-kept secret in a way, that this is how these things work and how they operate and how they play out. But honestly, Limitless is not really interested in that, and we're not in the space for that. And I think you're the same as us in that way, in that we're building on-chain apps and marketplaces because we believe in the power of them and what they can actually do. And we don't think that like giving away a huge percentage of supply and rationalizing that with kind of a mega dump on retail is actually the best way to move this industry forwards. And probably that's why, we've been able to share this information. And I really hope that, this is a turning point for the whole space. And like I said, I really respect CZ and Binance for everything they've done so far. But the current status quo, if we want to make it as an industry, in my opinion, is not good enough. And we need to level up. And, at Limitless, we have a very like open, hard feedback culture. I mean, with each other, with my co-founders, with our team. And that's, what helps us to improve and get better. And this is something that we would like to see applied more broadly to the industry, especially when, this actually, real hardworking people with skin in the game that we're talking about here.
Yeah, it's probably worth highlighting why this fee is allowed to exist in the first place and why founders historically have taken this fee. Whereas just like, liquidity on Binance, which is also, distribution for your token is incredibly valuable. It can add tens, hundreds, perhaps even $1 billion of market cap onto a project. And so, what's 8%? Of a sacrifice if you're going to add $100+ million to your potential market cap. Granted, it might be a deal with the devil over the long term, but like so many founders are trying to just go from 0 to 1, and maybe they think that 8% token supply listing fee to Binance is the way to just like to get ahead. And also to Binance's credit, like as you've highlighted, Binance as a single institution has probably brought more people into crypto than anyone ever, not even close. And so, they have helped grow the industry, distribute the industry, make the industry safe, haven't lost any customers' funds. And so like we could go on and on and on about the value that Binance has brought to the table for the industry, which is why they can say, hey, like 8% is the entry fee of your total supply of your token. It's illustrative of the value that they are bringing to the table. I think what we are thinking now is like the value is starting to flip and it's starting to be more extractive than what should be fair. And perhaps one of the reasons why this open secret has remained, pretty well behind, like we knew as an industry that these fees exist, didn't really know about them in detail. And like, why is that true? Well, Binance has no incentive to illustrate how much of a fee that they are taking, how much cream they are just cutting off the top. founders probably don't want to disclose that they gave 8% to Binance. Like they did that. Like that's kind of like, they just don't want, no one in the inner circle, like market makers, they don't want to talk about how much of the share of the token that they received either. No one wants to really reveal these details. It's not in anyone's best interest. And so this secret kind of just stays quiet, stays a little bit mum, even though everyone on the outside kind of knows the contours, the loose, broad contours of what's happening. No one really knows, and no one's really incentivized to kind of like give up these details. CJ, when you posted the tweet with like kind of line items of just like 1% of tokens go to this, 1% of tokens go to that, $250,000 goes here. I'm assuming they gave you an actual document. Why not actually just release a document itself?
Well, I did in the end share it was in a Telegram group chat, actually. A very, very crypto native way of sharing a proposal. And by the way, I do believe that there was room to negotiate. And that was expressed. And so potentially, the deal terms could have been improved somehow.
Sure.
I think that centralized exchanges almost rely on the fact that a lot of founders are not very familiar or very well versed in liquid markets, and they kind of use that to their advantage. And I would even go as far as saying that the way the proposal is structured, it's kind of inherently pretty confusing, right? Like you have to just like kind of sit for a minute and understand exactly like, okay, there is this percentage there is that percentage there, then there is a cash fee, then there is a security deposit, and kind of piece it all together. And, I would probably suggest that is also kind of intentional. And I think that a lot of founders actually don't know what they're getting into with the kind of deals that they make with centralized exchanges. And like, they just probably assume like, okay, that's like what it costs and, that's it. We actually, we want to go with a different approach. We believe in like on-chain capital markets, on-chain capital formation and community building, and kind of driving acquisition and activation of our product through skin in the game and co-ownership with the community. And we think that centralized exchanges need to, if they want to, last, they have to become a gateway for the on-chain world, and not just kind of be this almost gatekeeper, right? Which is, using, this flow to extract maximally. And, like the situation that just happened with this like cascading like liquidation event. I mean, it's impossible to blame anyone directly for that, but I don't believe that was kind of healthy or ordinary market activity. In some cases, like liquidity was completely vanished from different order books. And I think that it was pure market manipulation, and it was a pure orchestrated assault on retail. And, there was the case where Hyperliquid has been reported as having the most liquidations in terms of like dollar amount. But it's also kind of, another well-kept secret that centralized exchanges underreport their liquidations for the sake of like community sentiment. And I truly think that moving these markets on chain makes them more transparent and makes them more fair and equitable by default. And that's actually what we believe in and why we're here. We don't just want to recreate the same walled gardens from the traditional financial system, but throw in a few blockchain calls here and there, because that doesn't actually meaningfully upgrade anyone's life or the underlying infrastructure.
Yeah, and really just to add on to that, Binance has a number of like trophies, like relics, like golden gooses that they get just because of how dominant they are. Like 85% of like total volumes are on Binance, spot volumes and also derivative volumes. And when that happens, like, but there are just like a number of like second, third order consequences, effects that Binance gets to enjoy, One being the very high token listing fees. Like if you have all the liquidity, you could charge very high fees. Two, a lot of like startups and even like Ethereum protocol development considers like sex-dex arbitrage. Like what that really means is like the price on Binance versus the price on Uniswap. And we are considering the price on Binance versus the price on Uniswap when we think about when Sorella Labs thinks about how to design their DEX, or UNICHAIN is thinking about TEEs and going at like 200 millisecond blocks to go very, very fast. All of this, much of this is motivated by the fact that Binance has pricing power. They like price discovery of Bitcoin, of ETH, of any material asset happens on Binance because it doesn't happen on chain. And like where are tokens getting listed and where are fees being paid? Being paid to Binance because that's where liquidity is, because it's not on chain. And so like in 2025, the year of our Lord, 2025, like centralized exchanges still have so much bargaining power because price discovery and liquidity is on Binance. So it's not even like a sex versus DEX illustration. Like if Binance went away, would it go to Coinbase? Maybe. But it's really just like Binance versus like they have Binance Chain, but even Binance Chain doesn't have the volumes that Binance has. So like price discovery moving away from Binance and centralized exchanges and formulating on chain is just good for everyone, because then the whole system is auditable. The whole system is transparent. What are Hyperliquid's listing fees? Pretty sure it's 0. In fact, I think you actually can get paid to list the tokens because you get some of the trading fees. And that's what we're here to do. That's like, yeah, you should get paid to list your token, not the other way around, because that's the nature of what on-chain is. Like there are so many different on-chain applications that should be competing for CJ for you to like list your token on Hyperliquid or Base or whatever. There's no question there, but like what are your sentiments about that?
Yeah, for sure. I think that like fundamentally all markets will move on chain. Of course, I'm excited about prediction markets, but I'm also excited about like perp markets as well. I think they're a great way to continuously price real world assets as well as crypto assets. And yeah, I think we're really at a turning point. And I think centralized exchanges like Coinbase are kind of making really like welcome steps forward here, because doing things like putting Aerodrome inside of their main application and giving users access to like Bitcoin lending that's built on top of a DeFi protocol. I think this is very much the way that the world is going, and I think it's very much like kind of get on board or get left behind kind of situation for a lot of the current incumbents. And also, I mean, in terms of what you mentioned with Binance having a monopoly on flow, I mean, I would also take a look at the Korean exchanges, like Upbit and Bithumb. I think that there is also a lot of users in Korea who actually don't use Binance. I think from our Kaito sale, around 30 or more than around 35 million of the total pledges actually came from Korea, which was the largest for any single jurisdiction. And so there are a lot of users, retail users and retail flow in regions like Korea who don't even use Binance. And I'm not sure that the market share is 80 or 90%. At least for perps, I think it's more like 60%. And I haven't actually checked it recently. I know Hyperliquid has been doing a really good job. But I think in general, like you mentioned, arbitrage, because you have like very much kind of Pareto principles here, where a small number of customers drive the majority of like volume and revenue. Like Jump pays like $15 million per day in fees to perp exchanges or something crazy like that. Obviously, they're making way more than that, but also like one of the core ways that they monetize is from trading like spreads across different exchanges, right? And so I think that's why we always kind of do see multiple venues emerge with deep and comparable like liquidity and open interest. And I do think that, as more and more retail flow and attention actually comes on chain, which is very much bottlenecked by like regional regulations and like on-ramping infrastructure and stuff like that. I think as these kind of barriers are slowly broken down, we're going to see more and more users on chain. And we're going to see, less and less need for these gatekeepers. And that's what I'm like deeply excited about. And yeah, I just hope that exchanges, not only Coinbase, but other major exchanges can also be like open to this constructive feedback and can embrace the on-chain world and the kind of revolution, I would say, which is happening.
Introducing FRAXUSD, the genius-aligned digital dollar from Frax. It's secure, stable, and fully backed by institutional-grade real-world assets, custodied by BlackRock, Superstate, and Fidelity. It's always redeemable one-to-one, transparently audited, and built for payments, DeFi, and banking. The best of all worlds. At the core is FRAXNET, an on-chain fintech platform built to align with emerging US regulatory frameworks where you can mint, redeem, and use FRAXUSD with just a few clicks. Deposit USDC, send a bank wire, or tokenize treasuries, and receive programmable digital dollars straight to your wallet. FRAXNET users benefits from the underlying return of US treasuries and earn just by using the system. Whether you're bridging, minting, or holding, your FRAXUSD works for you. Frax isn't just a protocol, it's a digital nation, powered by the Frax token and governed by its global communities. Join that community and help shape Frax Nation's future by going to frax.com/r/bankless. Frax, designed for the future of compliant digital finance. Bit Digital, ticker BTBT, is a publicly traded ETH treasury company that combines the two biggest metas of our time, Ethereum and AI compute. Bit Digital believes that ETH will power finance and AI compute will power everything. Bit Digital gives you direct exposure to both. Bit Digital holds more than 150,000 ETH with institutional grade staking and validator operations. On top of that, the company owns roughly 73% of White Fiber, an AI infrastructure business that runs high-performance GPU data centers that adds a meaningful exposure to the growth of AI compute with over 27 million shares. This is an ETH treasury backed by real operations, designed to capture staking yield today while positioning for the future of intelligent computing tomorrow. The ticker is BTBT. This ad is not financial advice. Do your own research, learn more about Bit Digital, and try their MNAV calculator at bit-digital.com. That's bit-digital.com. Bankless is being compensated by Bit Digital for this ad. You can find out more information by clicking the link in the show notes. Ethereum's layer 2 universe is exploding with choices. But if you're looking for the best place to park and move your tokens, make your next stop UNICHAIN. First, liquidity. UNICHAIN hosts the most liquid UNISWAP v4 deployment on any layer 2, giving you deeper pools for flagship pairs like ETH USDC. More liquidity means better prices, less slippage, and smoother swaps, exactly what traders crave. The numbers back it up. UNICHAIN leads all layer 2s in total value locked for Uniswap v4. And it's not just deep, it's fast and fully transparent, purpose-built to be the home base for DeFi and cross-chain liquidity. When it comes to costs, UNICHAIN is a no-brainer. Transaction fees come in about 95% cheaper than Ethereum mainnet, slashing the price of creating or accessing liquidity. Want to stay in the loop on UNICHAIN? Visit unichain.org or follow at UNICHAIN on X for all the updates. Are you worried at all, CJ, that you kind of have like kicked the hornet's nest? Like there's a 800-pound gorilla and it's called Binance. And now Binance doesn't like you. And they've made some like PR blunders along this path here. But like nonetheless, like you've picked a fight with CZ, you've picked a fight with Binance. Does that scare you at all?
Like I said, I really respect CZ and Binance for everything they've done for the space. And 800-pound gorilla fighting with anyone generally is not a good look for the 800-pound gorilla, and so I probably would not recommend to keep engaging because I don't think that it has gone so well so far.
Your Limitless is built on Base. In your tweet where you disclosed all of the deal structure for the Binance listing fees, you concluded with, and this is why I build on Base, throwing a very favorable bone to Coinbase and Base and Jesse. Can you just like illustrate that, give that a little bit more color? What's it been like being a builder on Base?
Yeah, I mean, like, even if we just like abstract away like all of the context and like absolutely everything else, and I just compare just the experience of like like what Coinbase would ask for a listing and what Binance typically asks for, that was just a pure comparison that I wanted to make. And I know that there have been like some tweets online, like the Andre Cronje from Year in One. Or ex-Year in rather, that was kind of, saying that Coinbase had charged them millions back in the day. And then you also have people saying that they were listed on Binance for free and all of that. And I think that probably both of those instances are actually true. And I think we're just saying that, like, yeah, probably that is true. So why would we give you 8% of our tokens then? Yeah, in terms of Base, they've been really supportive for projects that are building like natively on Base, and we've kind of seen this pathway where you have the Aerodrome, like Onchain launch, price discovery, fast follow with the Coinbase listing. And yeah, they literally don't ask for anything. I can kind of confirm that, at least if you're a meaningful part of the Base ecosystem and you actually, build something that matters and have real users and bring value to the ecosystem and community in some way, which I think it should be all about, right? So it's like, I just don't understand the calculus unless you are trying to go out there and like dump a bunch of your tokens on day one, which fundamentally we're not trying to do because we actually believe in Limitless, long term. And so, we're not trying to just generate a bunch of liquidity from a Binance listing and kind of sail away into the sunset. Now, if that is your goal, I understand, the calculus behind why you would do that. But for us, we're like, we want long-term value alignment. We want to be part of an ecosystem which believes in, all of the important, values about crypto, about decentralization, about building on chain. And like, actually, we want to be here for the long run. And if we think about this from a more longer term perspective, then, burning 8% of supply for a day one listing on Binance just isn't a good calculus.
I don't know if you have, I know you're pretty early on your TGE process and all of that, but I don't know if you have like a plan or a roadmap. I think like if I was building a Base app, an app on Base, and I'm approaching my TGE, it would be something along the lines of do the TGE, put the token into Aerodrome, seed liquidity, and once it's in Aerodrome, it's available on the front end of Coinbase. Now it's not listed on Coinbase, but nonetheless, like retail consumers can find it on Coinbase and purchase it on Coinbase using an external wallet. Maybe it's a little bit more cumbersome than if you just had got listed directly on Coinbase, but nonetheless, like it's pretty sick to be quote unquote listed on Coinbase on day one just via Aerodrome. Is that your plan, or are you just like still kind of formulating this idea?
So we're definitely preparing for like a fully on-chain launch and fully on-chain price discovery. That's kind of our strategy. And I believe that we'll set a new precedent with this and many will follow. But on the other side, if you are building a meaningful app on Base, you absolutely can get a day one Coinbase listing. I'm not talking about Aerodrome. I'm talking about Coinbase listing.
The real listing with real market makers?
For sure, that's on the table. So if you actually build a meaningful app on Base, you can be listed on Coinbase on day one, and they will support you. So it just depends on kind of your preferences and also how you think about design. And again, there are a lot of bad actors in this space, and even like a lot of tokens and communities suffer because of bad deals that are made between not only centralized exchanges but also market makers. And so I think that the launch strategy and the amount of supply, which is kind of dead on day one, is a litmus test for does the founder of this product or company or community or ecosystem, do they actually understand liquid markets or not? Because if they don't understand liquid markets, then the chances are that they're getting fucked by market makers, they're getting fucked by centralized exchanges, and in the end, that translates to retail ultimately facing the hardest consequences.
Yeah. I do want to get into Limitless and just like kind of pop open the hood of Limitless and see what's under the hood there. But I have like one last question on this whole like listing drama. There's a thought out there that like Andre from Yearn, when he created the Yearn token. It was the coolest thing since sliced bread back in 2020 when he listed it.
What
And
a time.
Yeah, crazy time, like very nostalgic. And so then he earned that like Binance listing for free because like everyone wanted to trade Yearn anyways. That's not the typical case. The typical case is probably something closer to your startup, where you have a relatively new startup that's gaining traction, and a Binance listing would actually be a huge win for your startup. And so the founder is like considering doing that, considering paying that fee. Paying that 8%. Maybe it's higher, maybe it's lower. You said it potentially is up for negotiation. In theory, you could negotiate it down. But then also in theory, you could see another startup being offered like, give us 15% of your token supply. I don't know, something like that. And a lot of, like I said, a lot of founders take this bet. They just take this gamble that like, okay, this is an acceptable trade. This is like positive EV for me, and that's why I'm going to do this. The thought is that because of so much of the token supply goes to like, inside of the Binance ecosystem, like, and what are they doing with that? In the fullness of time, they're selling it. And so that's 8% of sell pressure that your startup has to overcome in order to survive. And so, yes, you get the liquidity, you get the day one pop, maybe you even get the year one pop, but like anywhere between 5 and 15% of like sell pressure is hard to overcome. I don't know if you have any, you're again, Limitless is pretty young in its, TGE arc. But like, I would imagine that would be almost destructive for many projects out there. Just like, can you overcome 10% of your supply getting sold before, like in the first 1 to 3 years of your startup? And like, maybe this is just like actually kind of a trap that maybe founders think that it's positive EV, but it's actually negative EV in the grand scheme of things. I don't have any experience here. I've never listed a token, but I don't know if you have any thoughts on that.
So this is pretty rough, but you're right. It's impossible for this to be like positive EV. Like, I mean, of course there can be like insane amount of buy pressure, which does happen for some tokens. I think like Solana probably is a great example of like an absolute kind of home run, like from zero to hero and like ran the test of time, right? But like the thing is, you're expecting that founders are actually thinking about this game from a 2 or 3 year perspective. In fact, what they're doing is dumping on day one. So the calculus, the founders, market makers, founders. So
everyone. So the founders in on it.
Yeah, that's what I'm saying. That's actually when you understand that the space is even worse than you thought it was, and that's why. And so if you go and you look at my mentions, right, over the last 24 hours, the founders who are like backlashing me for this are guilty. And the founders who are, supporting exposing the truth are much more value aligned, like with you and I. But probably collectively we have, they say, like, never meet your heroes, right? Like collectively we have higher expectations of people than what is the reality. And the reason why this calculus makes sense is because they're dumping on day one, right? So however they structure that is, very much a gray area. But that's why people are taking these deals, because they are also dumping, right? So this is positive EV, but in a sense, it's almost like blood money, right? It's positive EV for a specific founder, but at what cost to the community?
Right.
And
it's
that's
positive
what I'm trying
EV for a smaller circle of people, and it's negative EV for the long term of the health of the project.
They're not thinking about like 2-3 years, can we recover from this?
Right.
They're thinking about like, can I buy another Porsche next week? And that's what I'm trying to call out here. I want us to be aware of that, and I want us to be open about that, so that we can move the space forwards and kind of drain the space of these bad actors.
Okay. So it's not just Binance charging good actors.
It's not just centralized exchanges.
Fee. It's bad actors who are also saying, "Hey, I don't care about that fee, because by the time that chicken comes home to roost, I'm out of here."
Yeah, and that's what changes the calculus. So when you think, well, truly that doesn't make sense, that's why it makes sense. Because people are worse than you think, I would say.
Yeah, if anything crypto has taught me anything, it's that people are worse than I thought.
Yeah, exactly. And that's what we're trying to call out here. Like, and when you see people like going against us on this, probably now you clearly understand why. Because we're not just going against the centralized exchanges, we're going against bad actors in general.
Well, CJ,
of which there are many.
Yeah, it takes some grande cojones to go after Binance and CZ. And so I think at the very least, thank you for the entertaining 48 hours on Twitter. And then also hopefully thank you for what can be hopefully a turning of the ship moment for the crypto industry. Like sometimes we just need details and we need information for us to all be able to like, yo, we're all looking at this. We all know that this is true. Everyone else knows that this is true now. Let's adjust our strategy broadly and let's not like continue on down this path and let's do something different. So if that's what gets catalyzed as a result of these just the last 48 hours on Twitter, that would be a huge level up for the industry as a whole. So for the very large role that you played in that, just thank you. Thank you for doing that.
Yeah, thank you for supporting. And yeah, I think I really hope that like from this we can, from this transparency and from kind of like ripping off this band-aid, we can start to rethink, token designs and the relationships that centralized exchanges have with the on-chain world, like from first principles, so that we can move the space forward.
Introducing KGEN, aka Verify, the world's largest verified distribution protocol, or VDP. If you're trying to grow a real protocol or app, you need real users doing real actions. If it's not Verify, it's just noise. At the core of Verify is Poggy, KGEN's identity and reputation framework. It helps you reach humans, not bots, and proves what your users actually did, so your budget goes to the right people. With Verify, you can run verified user acquisition with confidence, keeping people coming back with retention tools like loyalty rewards, quests and achievements, and even power AI training and evaluation using trusted, verified user groups, ensuring your models learn from clean data. And when it's time to reward your community, there's the K-Store, a global rewards marketplace where users can redeem perks that connect directly back to your app. Put simply, when growth is built on real users, you grow faster, and that's exactly what Verify delivers. If you're building in Web3, AI, or gaming, request a demo to grow your protocol at www.kgen.io/demo. That's www.kgen.io/demo. Imagine a world where traditional finance meets the power of blockchain seamlessly. That's what MANTLE is pioneering with blockchain for banking, a revolutionary new category at the intersection of TradFi and Web3. At the heart is UR, the world's first money app built fully on chain. It gives you a Swiss IBAN account blending fiat currencies like the euro, the Swiss franc, the United States dollar, or the renminbi with crypto, all in one place. Enjoy real-world usability and blockchain's trust and programmability. Transactions post directly to the blockchain, compatible with TradFi rails, and packed with integrated DeFi features. UR transforms MANTLE Network into the ultimate platform for on-chain financial services, unifying payments, trading, and assets like the MI4, the METH protocol, and Functions FBTC. Backed by developer grants, ecosystem incentives, and top distribution through the UR app, reward stations, and Bybit launch pool. For MNT holders, every economic activity in UR drives value back to you, embodying the entire stack and future growth of this super app ecosystem. Follow Mantle on X at Mantle_official for the latest updates on blockchain for banking. That's x.com/Mantle_official. All right, let's get into the second half of this episode. Let's talk about Limitless, man. So Limitless is a prediction market. I think when I say the words prediction market, people are going to think poly market or Kalshi. How is Limitless different? What should people know about Limitless?
Well, Limitless is limitless, first of all.
Nice.
I think that we are the simplest way in the world for users to get access to high leverage. What I mean by that is they don't have to learn about liquidations or funding rates or configure stop losses or learn about options pricing Greeks. So the learning curve for Limitless is very, very insignificant in that everything that you need to know to get started is inside of a single mobile optimized page. Right now, we focus on like daily and hourly price markets. So it's basically like, will Bitcoin be above this price in 1 hour? Or will Tesla be above this price in 1 hour? Now, because it's a kind of vanilla prediction market in that it trades from like 0 to 100 cents throughout that time frame. If you look at like Bitcoin, for example, you might have a basis point move in underlying Bitcoin price in 20 minutes, but you might have bought prediction market shares at like 1 cent and they went all the way to 100 cents. And so we call this implicit leverage, and that there's not a margin lending in a traditional sense, which is very high, leads to a lot of liquidations and also has high chance of manipulation, as we saw recently. These are fully collateralized swaps, but because of the time decay and the kind of binary payoff structure, it means that retail can get access to potentially very high returns. Of course, there is a lot of risk as well, and I think users are comfortable with that. But instead of having to go on this like years long hero journey of like trying to figure out how to trade and like losing money anyway, all the user has to do is come to Limitless on their phone. They can be like hiking a mountain or in the metro or in between sets at the gym, and all they actually have to do is pick a side, right? And picking a side is a fundamental human behavior. We love to pick a side. We love to support a football team or like be a fan of like a music group. And this is something that comes naturally to us and we get emotional and defensive and fiery about. And all the user has to do is choose like above or below. So for example, will Bitcoin or will Tesla be above or below this price? And you'll be surprised the amount of conviction that a casual user can build in any of those arbitrary statements. But you'll also be surprised that, some of the extent of the payoffs and, the amount of returns. I mean, just yesterday, I posted a screenshot on X. Someone made 5,000% ROI on an hourly market betting that BNB will go down after these tweets. And so it's very, very simple for average user to get involved in this thing. And we think that this can be a giant new derivatives category that will drive trillions of dollars in volume in the coming years. And something else that's interesting is we just did a kind of analysis. We're exploring to build like a suite of structured products on top of these kind of price prediction markets. What we found is over a 72-day period, if you'd held Bitcoin, I think you would have been down around like 5%. If you invested in a covered call strategy using Deribit options, you'd be up 3%. And if you invested in a synthetic covered call strategy that accumulates limitless prediction market shares instead of options contracts from Deribit, you'd be up 49%. So not only can we give this super simple trading experience to casual users, but if users don't want to trade at all, we can also give them access to kind of high yield products where all they have to do is, deposit stable coins and be done with it. And then also, after this crazy cascading liquidation event, which happened where we actually saw, I believe, more liquidations than we ever saw before in crypto, which again is, in my opinion, this is an orchestrated assault on retail, and this is pure market manipulation. But we actually saw that Deribit, who Coinbase has just acquired for like $3 billion or whatever, actually it was cheaper and more efficient for you to come and bet on daily Bitcoin price using Limitless than Deribit, which is a $3 billion entity. And so, this kind of is a upgrade and a very kind of new kind of market structure that we're very excited about. And we're basically focused on like leading mainstream adoption of this around the world, and particularly right now, focusing very much on the Asian market. So regions like South Korea, Hong Kong, Taiwan, etc.
I want to understand a little bit more about this mechanism. So I'm on the page, right? And every hour, this updates, right? And so right now we are 6 minutes past the hour at the time of recording. And so right now there's a baseline Bitcoin price of $111,146. So that's the price to be above or below. And right now we are basically at that price. So 1,146 is the price. Oh, we just popped up. Now we're at 1,163. And so right now, like a share on will it be up or will it be down is about 50-50. But you're saying like when it goes down very, very low, it might the price between a yes or above or below share would be dislocated to like maybe 90-10, 95-5, and that's where the leverage comes from. Is that how it works?
Yeah, exactly. So like there, like again, we talked about FOMO earlier and how that drives people. And another very kind of powerful behavior is fear. And I think that, as you mentioned, it's pretty close to the baseline. Now imagine it was close to the baseline, but there was 30 seconds to go instead of 50 minutes to go.
I see.
With that time decay, that's when things start to get, a lot more kind of fun and wild and crazy. And we start to see those kind of more exceptional return profiles.
You were talking about being comparing purchasing Bitcoin spot, purchasing Bitcoin on Deribit, holding Bitcoin on Deribit, or doing this through Limitless. But these markets turn over every hour. So how would I be a Bitcoin investor if this market closes every hour?
We also have daily markets and weekly markets, monthly markets. It's just that
there we go.
Hourly and daily markets are by far I would describe them as kind of self-sustaining atomic network trading communities where we actually see like self-reinforcing network effects, and people just kind of have a huge demand for these markets and they keep coming back for these markets. Like our week one retention is over 50%. And we don't have like push notifications yet. Like we're a startup, right? We're trying to build as much as possible, as fast as possible, and test as many assumptions as possible, as fast as possible, in as few steps as possible. But ultimately it takes time. And so we're far from perfect. We have a far from perfect product. And like, we don't even have basic things like push notifications or email marketing, or we didn't introduce like gamification yet or social features. And we have very compelling retention just because users fall in love with this kind of content form factor and they keep coming back and they keep wanting more of it. And so I think there's really a way to go in terms of improving like Limitless as an offering and the core product experience that will kind of strengthen these metrics and this retention and engagement level even more. And at the same time, as well as kind of improving the product and trying to make it more sticky, we're going out and we're trying to solve much deeper liquidity for these markets so people can trade in larger sizes. And this is kind of an ongoing like snowballing process. Like I just had a great meeting today with one of the largest like trading firms in the world. And we're actually going to be the first prediction market that they're integrating with. And that's super exciting, but more on that later.
I think all prediction markets have to cross this chasm from being a like niche retail gambling platform for again, like very niche instruments. And that's where all prediction markets start. And then all prediction markets want to become a financial instrument that like is CFTC approved and Wall Street leverages because it helps them express a trade in a particular way. And they are pumping billions of dollars of volume through that one prediction market. And like Kalshi and Polymarket are on their way there, but they're not even close to getting that far yet of being like a Wall Street, like a financial instrument that Wall Street is accustomed to and is part of their like, daily exercise and like daily routine and part of their overall broad strategy. Limitless, like I go on the website and be like, okay, like what do I want to gamble on? Do I want to gamble on Bitcoin being up or down over the hour? To me, like that looks like, I'm just going to like have some fun at the casino. What is your conviction? Why do you have conviction that we can get Limitless to a like hardened financial instrument that Wall Street will be able to use? Why is this a financial instrument and not just like a gambling platform?
So I think fundamentally, Wall Street, will go where the people go ultimately, right? Love it or hate it. And our focus today is actually not on Wall Street. Our focus is like, I would say like on people, not actually right now in the US, although we are building our licensing. As I mentioned, we're focusing heavily on Asian markets right now and then in like that particular part of the world. But trading is so hard and so complicated. Like perps are hard to use. For you or I, we may like sit and argue that, they're actually not that hard or whatever, but that's also quite a, I would say like out of touch position from the average user because it is hard for people to understand like what is an order book or what is a stop loss or what is a funding rate or why they should pay it or why they just got liquidated. Like I literally remember when I was 16 years old and I discovered somehow BitMEX. And I was like, wow, 100x leverage. Like, surely I'm going to be rich by tomorrow. And like, I'm done with everything. Like, I can get 100x more bang for my buck. Like, where's the catch here? Right. And then obviously within about 5 minutes or maybe even 1 minute, I got liquidated and I can instantly, okay, like that's the catch. Like, I got it. Okay. Don't have any money now. Like, my pocket money is gone. Right. And I think that trading product, like, I mean, have you like Robinhood is pretty good, but like, have you ever used like the European like brokerages? Like, did they suck, man? Like, they couldn't.
Yeah, I don't know. I have no interest in using a European brokerage. Let me tell you.
But like, if you try to build a bad product, you would build a better one than most of the. With the exception of like, for example, in Singapore, they also have kind of like pretty decent like retail brokerage products. But like, if you use like interactive brokers like in Europe, I mean, like, it doesn't even make sense. You can't even buy the SPY, right? You have to buy some like obscure version of it that has a pricing delay. So because of the like European market hours or whatever, it has like a 1 day lag on the actual pricing. So if you bought based on news, you actually would lose out, right? And all these kind of like, I would say like systematic modes of extraction and of rigging the game against retail. And so like the trading experience like globally is like broken. Perps are like not that bad in comparison, but they're still very complicated. If you want to learn how to trade perps, though, as I said, you need to understand like all this stuff, like funding rates, liquidation, stop losses, order books, then like also options. Like, I mean, it takes a long time to understand how options pricing Greeks work and what they mean, and like how to trade different like condor, butterfly strategies or whatever. It takes a lot of time. It takes years probably to master it. But as I mentioned, you can come to Limitless and instantly, intuitively understand how to play and how to participate. And you can get started with a couple of clicks. And because we're building on chain, we have stable coins, we're instantly in hundreds of markets, globally without having to go and grind, licensing in each particular jurisdiction. And I think that's a huge unlock. And I think that, these factors together means that Limitless will actually build the largest exchange in human history.
Yeah, big statement. So will Limitless always be focused on these pricing markets? Because again, not to compare you guys to Kalashir Poly market, but again, this is what listeners, this is what their frame of reference is. They go onto Poly market and they see like, are the Seattle Mariners going to win the World Series? Like 37%. So like, truly anything. So are you focused on these like pricing markets, or like are there other theoretical markets that you haven't introduced yet, or like what's your plan there?
So I believe there is trillions of dollars in volume in price prediction markets only, right? Right now we focus on hourly and daily markets. We also want to introduce like 5-minute markets, 1-minute markets, 15-minute markets. We recently introduced like 30-minute markets, but there is a lot of experimentation to be done in terms of durations. There's a lot more tickers to be added. And then, and so I do believe that in just by itself is a giant thing. Also, what we see is like users who like sports markets want more sports markets, right? Users who like geopolitical markets want more geopolitical markets. Users who like prices markets, or even it goes more granular than that. Users who like hourly markets want more hourly markets. Users who like daily markets want more daily markets. And so we kind of see like network effects forming for the specific like different categories. But look, like Limitless is a very powerful underlying infrastructure, and I certainly don't rule out expanding to other markets in future. But right now, we believe as a startup, we can kind of have the best experience for our end user by making a very concentrated bet on the particular thing that they like and want more of.
How much like volume or just like user interest? Talk to me about the traction of Limitless so far.
Yeah, we did around like 80 million in volume last month. We're almost at 80 million already so far in October. So looks like
in October, and we're halfway through.
So looks like we're gonna bug some solid growth. As mentioned, we have very compelling retention, like 50% first week, and also we had around like 40,000 traders last month, and this is kind of growing exponentially.
Very cool. Well, congrats on all the success. I want to pop open the hood and talk about the on-chain component of Limitless. What is actually on-chain? There are like USDC deposits and it's on Base. But like what other logic is on-chain?
Yeah, like all of the custody, all of the execution, settlement, and like resolution of markets is like a real-time price feed. I think another core problem with prediction markets, it actually takes a little bit of time to get your money back due to the whole like kind of resolution games that are going on. With Limitless, it's much simpler, right? And the markets resolve instantly, and people kind of keep going into the next market.
Right. I would imagine if I'm betting on like an hourly market or a 5-minute market, I might want to bet on continuous 5-minute markets over and over and over again. So you need to resolve very quickly so I can have my money back so I can bet on the next one.
Exactly, yeah.
Yeah. And you get that from just price oracles?
Yeah, exactly. We're using Pith Network right now. And they have a lot of different assets, like not only crypto, but also stocks, commodities, like, gold or the SPY or basically anything.
Mm-hmm. Okay, so Limitless itself is bankless. It's a non-custodial platform, so everyone self-custodies. Everyone brings their own wallet. The price oracles are autonomous. And resolution autonomous. So what like layers of trust are left inside of the system?
Well, we have order matching, which is off-chain, just because it's a very kind of high performance thing that's hard to put on a like standard EVM blockchain. So right now, order matching kind of happens off-chain, but all the execution, settlement, and custody happens on-chain.
And that's the same for Polymarket too, right?
Yeah, that's right.
Yeah. Okay. So you guys have a pretty much similar trust set up to like Polymarket, where the like execution is on chain, it's non-custodial, USDC deposits. Polymarket doesn't have oracles because it's not priced, and so their oracles you like UMA, but that's only in the unhappy case. In the happy case, I think it just resolves. Sounds like a pretty similar trust setup to Polymarket.
Yeah, with the exception that we have the kind of instant price feed resolution, but obviously we don't have the more subjective markets currently, so it's much easier to deal with.
Yeah. This might be like outside of the realm of like what Limitless like focuses on, but I'm really into. I guess maybe in this way it won't be. The conversation of censorship resistance in prediction markets, I think, is actually pretty important to me, and I think is under discussed in the conversation of prediction markets. Both Kalshi and Polymarket don't let users spin up their own market, and there's plenty of good reasons why. But also there are plenty of good reasons why you should allow users to spin up their own market. Like prediction markets are truth-speaking mechanisms. They're the connection of markets and truth. And maybe with pricing actually is like the asset pricing is actually the first. Maybe a first prediction market where you could give users the power to like, hey, like there's not a market for this. Let's give that power to the users. Have you thought about that?
Yeah, for sure. I mean, that's definitely a low-hanging fruit. Actually, when we started, building in prediction markets, one of the initial assumptions we were super excited about was user-generated markets, kind of like as a means to scale user choice and uncover like more information and kind of be like almost like an Amazon of prediction markets. I mean, I still see like companies now raising pre-seeds for similar ideas. I mean, there was one of them like just like a week ago or something. The problem is when you have long tail informational markets, there are no conventions about how you price those markets, except from using insider information, right? So like, how do you price whether PDD is a rapist or not? Or if like, it's a pretty hard thing to price, right?
Yeah.
Or like, if like Taylor Swift album gonna like sell X amount of copies. I mean, like you can build models for that, surely, but there are no kind of conventions, and there's also no way for you to like hedge your exposure because a lot of market makers like to run delta neutral strategies and kind of earn from the spread. And so that creates like a new set of problems, which is like, how do we actually kind of create liquidity for these markets? In academia, right, the assumption was always that you should pay people for reporting information. So because insider information is effectively how these markets are priced, you should put up like a pool of money that can incentivize people to come and report information to the market. And so it's very much like either like put liquidity and like lose like 99% or a good percentage of it from people who actually are better informed than you, or kind of subsidize this in some way to get it started. And so our calculus was like, well, okay, instead of subsidizing this forever, right, probably we should look for like a more sustainable model. And as our own kind of creator of markets, we had a set of market which was like, what will the price of Bitcoin be on Friday at like 4 p.m. Eastern time, for example. And then like my co-founder said to me like, oh, why don't we like test these markets daily to see if it boosts retention? And I was like, sure, why not? Like, so on a Saturday, I created a market like, what will the price of Bitcoin be today at 4 p.m. Eastern time? And then we started to see that these were basically like kind of, 0 days to expiry options. And there was a lot of latent demand globally for such products. And then, since then, we also kind of branched out to hourlies and saw breakout like demand and traction for those as well. So yeah, it's been a very interesting story.
Cool. CJ, well, it's been a fun arc to watch Limitless grow. If people are peaked about Limitless, where should they go to learn more or go use the app?
Yeah, just go to limitless.exchange and start trading. Pick a side.
Pick a side. Pick a side. That's a great line. And I mean, maybe they just want to learn more about you, or I don't know if they want to go join the community, read the docs. Maybe there's some like prediction market nerds. Where else can they go?
Yeah, like just go to limitless.exchange and you'll find the way further.
Cool. Well, CJ, thanks for coming on the show today, and again, appreciate all of the information that you've given the community on Twitter, and also the app that you're building on Base as well.
Thanks a lot, David. Thanks for having me, and yeah, let's keep in touch.
Bankless Nation, you guys know the deal. Crypto is risky. You can lose what you put in, but nonetheless, we are headed west. This is Frontier. It's not for everyone, but we are glad you're with us on the Bankless journey. Thanks a lot.